Hello everyone, this is Evan here from the Trade Risk on Wednesday, November 9th with a midweek market recap video. We are first going to analyze the current market environment. We're going to look at some other markets, sector analysis, and then finish off with some individual names. We got a lot to cover today, so let's just jump right into it. S&P 500 finishing up 1.06% today, and this is after a wild past 12 to 24 hours. Last night futures markets limit down. We come in this morning with progressively getting closer to positive. We did open red on the day, but managed to get back to positive territory very quickly. Finished strong, held on to those gains. Let's talk about where we are right now. This is the session today, of course. You can see a great expansion here in range, very bullish action. But before we even talk about today's action, let's talk about how we started the week. That was right here. That was Monday. And we started the week off on this bullish note with a gap higher and a strong close back above 212.50. And we effectively have made forward progress for all 3 days this week. Notice this gap here uncontested. We haven't had a chance, or the market really hasn't probed lower at all or made any progress in trying to fill this gap. And now we are suddenly, from 211, so we're almost 5 SPY points away from this open gap here. So it makes you really wonder, is this going to be another sort of Brexit sort of breakaway gap that we won't see filled, and does mark a bottom here, at least short to intermediate term, in the S&P 500. Going to the weekly chart, this is actually also what's getting me very interested here in really very bullish, is this past nearly 15 weeks of consolidation. You can see we thrusted to new highs, broke out to new highs throughout July this year, and then we've gone down to sideways to down for the past several months. And this is the first indication, this is the first real expansion higher, breakout higher that we've seen in quite some time. You'd have to go all the way back to July since you've seen a bullish candle like this before with this size. Granted, it's the midweek, it's only Wednesday. This candle, this session hasn't closed yet, so we have to wait to see what happens until Friday. But so far so good. We broke this pattern of lower highs here, and we're trying to break out from this consolidation. Also note that we actually undercut the long-term resistance here that we broke out of to all-time highs. We actually undercut that, came all the way down to 209, then we saw a gap higher and then a push higher. So very fast action. I like that, especially being a breakout trader. These are things I look for, these very kind of fast snapback, emotional, one bar reversals, gap higher, call it what you want. But this looks very constructive to me. So if we go back to the daily time frame, once again, we were looking at the weekly. It needs to close there. It's still got a couple of days left. So who knows what could happen between now and then. But so far, things look good. I think if you want to be long this market, you have a very clear line in the sand. That's today's lows down here at 212. If we started to break back below 212, 212.50, then I'd say all bets are off. You have to be concerned. You have to be cautious. You have to reduce that exposure. But I think as long as we're holding this gap in these lows on this very emotional day, I think you can try and stay with this market and start to look for long opportunities. Now, again, you have to be cautious. You have to know your time frame and risk. We've had a big move today. We're coming back into another resistance area up here at 217. So I'm not saying go out there and buy everything blindly on margin, but of course, it comes down to your risk, your strategy, your time frame, all that good stuff that most of you guys all know about. Let's talk about real quick something on the downside. A concern of mine after today's session was breadth. Now, breadth was finished the day about 55 to 45, 55% of stocks advancing versus 45 declining. That's actually a pretty low ratio. You'd expect that to be higher on a day like today, especially, with a 1% north close here in the S&P 500. You'd expect that to really be north of 70% of stocks advancing. Now, we can attribute that to the real sort of concentration in what was moving today. The stocks that were heading higher were really kind of juicing it to the upside, and we'll talk about that in a little bit. But something to keep an eye on. You do want to see that market sort of broaden out. You want to see lots of sectors kind of getting that that wind at their back and moving higher. So we'll keep a close eye on that. But otherwise, again, a constructive day. We're back to the top end of this range. You could say that we're bumped up against resistance. We really want to see, can we hold this now into the end of the week? Can we hold on to the majority of today's gains? If we start to fall back below 214, that would start to be my first kind of place of concern. But if we can kind of move sideways, even if we gap down tomorrow, but if we can hold above 215 and just slug it out sideways, I think that's constructive. One last comment I'll make on this, and this is something that I mentioned in a couple of videos ago, with everyone coming with again, I don't, using the word everyone is probably not right, but with many traders out there and participants going into the election very hedged up, very sort of risk off, wait and see, you have this sort of scramble chase effect. Now that the results are out, the market has its reaction, and if you want to get back into the game, you've got to kind of buy stocks up and chase this move higher. So don't underestimate that. I mean, if we do see, this chase into year end with managers starting to bump up that allocation and get exposure here, now that we realize everything is not going to hell, that could be a real effect that really starts to push us higher. Combine that with some seasonality and some bearish sentiment, or at least neutral sentiment, and you have a recipe that starts to look pretty good here over the next 1 to 3 months or so. But again, getting ahead of ourselves, take it one day at a time, use these levels, and let's see how we finish off the week. Moving into some of the other major averages here, Russell 2000, nice 3% pop close on the highs, back above 120.50. Talked about the significance of this level going back many years. That looks constructive. This last week's action looks like a great sort of capitulative washout type of candle. I like that. So small caps looking good. Qs, this is where we saw some hesitation. We'll get into some of these individual names that really weren't participating, that were your prior leaders. So I'm looking at big cap tech names. And again, we'll get into that. Still had a positive session, still closed on the highs, and still very close to all-time highs. So nothing of, extreme concern, but just notable here that we did see, really the small caps and some of the financials, industrials, things we'll get into in just a moment, really leading us higher today, and we have to wonder if that's going to be a new change of leadership. So that's that's sort of the rundown on the market. Let's look at some of the others markets out there. TLT Bonds getting crushed today, yields rising. We've sort of been in this downtrend for a couple of months now, so this shouldn't be a total surprise. Certainly, we were giving it maybe the benefit of the doubt in here as we started to consolidate near prior support, wondering, well, maybe the bond bulls can step in here and actually kind of push us higher again. We never really got the evidence. We just saw the sideways kind of wait and see action until today, where you just clearly got that massive move lower, one of the biggest down moves I think we've seen in probably certainly a couple of years. But don't quote me on that. So certainly looks in trouble here. I mean, weekly chart, take a look at what we did. We just kind of blew through this support level. We're quickly back into the mid kind of 2015 prices. So, oversold perhaps, but you got to be careful trying to knife catch this. Big move down, close near the lows. We'll have to see how this finishes off the week. Maybe you get some tactical reversal there for you very active traders, but for the longer term kind of haul there, the trend is not your friend right now in bonds. If we move to oil, had a constructive day, up almost 2%. Notice where it's finding support right back down here. This is where it found support in late September, mid-September, early September. So you kind of have a bit of a range here developing. One would have to think, can we muster up strength to get back up to the top of this range? Do we move sideways in here for a couple of weeks, couple of months? Something to consider, but you do have a little bit of a line in the sand there. UNG also really getting hammered over the past few days, but today seeing a bit of a reversal. Again, momentum in the trend is not your friend here ever since the beginning of October, where we had this nice breakout. It failed, and then it's just got very fast and furious to the downside since that time. Again, a little bit of promise here today. Opened lower, closed a little bit off the highs, but closer to the highs than we are to the lows. So that is encouraging. Maybe this is a good line in the sand here if you're tactical, but you still need to be careful there in UNG. Finally, let's look at metals, which opened strongly, closed on the lows of the day, back to this kind of trend line here that's been supporting gold, or at least where some buyers have stepped in. Let's see if we get follow through lower tomorrow, or if this indeed does act as support and we are, very sort of just grind our way higher across this trend line for another couple of days and weeks. Doesn't look too actionable to me. It hasn't. It just not clean enough for my style. And silver, more constructive. Again, open near the highs, closed on the lows, but still above the 8 and 20, which are rising. We did finish positive here in silver. Again, not the cleanest pattern. It's tough for me to want to get a hold of this. Got some nice movement, tradable movement, but really tough to just kind of swing this, as it seems to be pretty choppy in here, and the pattern isn't so clear. That should do it for some of the other major markets. Let's look at sector analysis, and that's going to be very interesting this time around. Financials, hands down, explosive move today, up 4.25%. Go to the monthly chart. You can see we're taking out, or almost, we did take out and close above the 2015 highs here in financials. And some of the underlying moves are just incredible here in some of these big financial institutions. JPM, for example, up 4.5%. This is one that we own. We've been in this for a while. Bit of a position trade for us. We trimmed half today on this nice strength. Still holding it, but you can see JPM now at all-time highs, and this is up 8% just this week alone. So quite a bit of acceleration here in JPM, and that goes for other banks like Morgan Stanley, up 11% this week. Daily chart, you can see up 7% just today. Bank of America up 5% today, up 9% on the week. Take a look at BAC, which is coming into some very, very significant resistance. Perhaps, could even flirt with a major multi-year breakout pattern here at play. A little early to say that yet, but you can see the significance of about this $18 level that we're bumping up against at the close of the session. So financials, monster movers today. Industrials, also monster move. Take a look at this candle here. Just look at the sheer size of this. Tells you the emotion and the intensity and the reallocation to this. And this is what can create trends when you have this type of initial movement here. Maybe overbought on the short term, but if you're looking out 3, 6, 9 months, this could be significantly higher if these moves really stick. So you can see back to highs here in the industrial sector. Materials, much of the same here, up 2%. Nice move higher, not at the year-to-date highs, as these really started to trade off throughout September and October, but you can see certainly starting to get back in the swing of things, starting to get back into favor. Keep that on watch. And then finally, biotech up 9%. The IBB today, XBI equal weight up 10.37%. So quite a bit of movements here. These are the sectors that were very concentrated, but you saw some very sharp moves higher. On the downside, the big standout here is XLU getting hammered down 3.75% on the day. You can see quickly coming back to these lows. And then staples, did manage to recover some of these gains here, but still weak relative to a lot of these other sectors. So those are the two standouts to the downside. Getting into the individual names now, this is also where we want to pay some pretty close attention to. A lot of these large cap, I would call them all leaders in this category here. These have all been the leaders of the market over the past, at least this year, and for most of the cases, multiple years. Didn't see that real sort of carry higher along with the rest of the market. Take Amazon, for example. We're seeing weakness here, down 2%. Again, we did have that earnings... we had that unfavorable earnings reaction. So you could say that's, maybe the start of it or the cause of this, general weakness. But again, with the market rallying, with a lot of these averages up higher, you'd expect some of these leaders to really be out there, which again pulls into question, are we really seeing a shift into financials, industrials, builders, those types of names? So Amazon, one, a little bit of a concern there. Netflix, again, down 1.73% on a day like today. This chart is still magnificent, right? It's had a huge run, but you just want to keep an eye on things like this. Tesla also down 2.5%. tough to call this a leader, as this has been interesting over many times, but a high beta name for sure. Google also down lesser so, down 80 basis points on the day, but still something to keep an eye on. And finally, Facebook, down 84 basis points. Again, still have that earnings gap above us. So you just want to pay attention to these names. Again, these are the ones that we're leading, and you just want to see if that really is materially changing, or does this just need a couple of days, weeks to catch its breath, and these will certainly, be off to the races again. So that's the video for today. I hope everybody had a good trading day. Thank you so much for watching, and I will talk to you guys soon.